Well, good morning, everyone. Thomas Montgomery. It is a beautiful Friday morning, January 27th, 2023. It's 8 o'clock Central. We're getting together on a regular basis, most weekdays. On occasion, we'll have a missed session like yesterday. But normally, we'll get together most weekday mornings, 8 o'clock Central, talk about strategies, tips, techniques, share success stories, and be a resource for each of you. Our topic today, as should be shared with you here on the screen, is the personal financial statement. So let me hit you with a few background elements before we dig into the form. So we always want to go back to our mission statement. What is it that you and I do together? Three things. We help small businesses increase their financial literacy. It's number one. Number two, we help them build a lender-compliant loan package. Number three, we help them become credible enough on paper to receive funding. The PFS form that we're looking at, that we're talking about, actually addresses all three. It's impacting all three of those areas: financial literacy, loan package, credibility. So it's especially important. Again, just some miscellaneous facts that you may know, but just to make sure we're on the same page. The PFS, which is short for personal financial statement, is for individuals. Businesses also have financial statements, but those are called balance sheets. Here we're talking about personal financial statements. If you're a white label partner, you're going to typically be working with your clients and helping them create an accurate personal financial statement, and you're going to submit that in to us so we can review it and help them strengthen it if needed. Obviously, when I say strengthen, we're only going to use legal and ethical strategies to do so. I will tell you that most small business owners do not understand how to properly fill out a personal financial statement. We have a training for that you should have. It's in YouTube, so you should be familiar with it. So our goal today is not to teach you how to fill the personal financial statement out. The reason for that is we've already taught you. There's already a training on that you should have access to. If not, email us and we'll make sure you have access to it. Today, we want to talk about some tips and strategies and pitfalls. So it's not step by step. That training already exists. I want to give you some feedback from what we're hearing. So what I said is that most small business owners don't know how to fill out a PFS accurately, and that's okay, because that's why you're there as the white label partner, is to assist them in that process. A financially illiterate client is okay, because again, that's what you and I are here to do, to help them. A financially illiterate client that is wrongfully stuck in their ways is our worst nightmare. I have a client, won't mention his name, of course, been working with him this week. He's a direct client, so I'm working with him directly. He's not through a white label partner. He submits his personal financial statement. It's woefully wrong, and I'll go a little bit more into that as we scroll down the page here. But just trust me, it's woefully wrong. And so what does that mean? It means either he didn't follow the instructions that we've provided, or he's being malicious or misleading. So, as you would expect, I try to counsel him. Hey, this doesn't look right. Let's talk about it. Are you sure this is right? And in his case, he was freaking combative. He was literally creating a personal financial statement the way he wanted it to look versus reality. So please consider the personal financial statement is accurate as of a given date, and it needs to be accurate. It's not what we want to happen or what we wish had happened in the past. It's a snapshot of now. Whatever that snapshot is, it's okay. We need to collect baseline information, and then you and I can pontificate on it to determine if we need to strengthen it or not, legally and ethically, of course. So just keep in mind, personal financial statement is what? Personal, not business. Now, it overlaps with business slightly, and we'll talk about that as we go through some of the pitfalls in just a moment. Secondly, it needs to be accurate as of a specific date. So you might have a different version of this PFS that you're working off of. The first page is not important to us. I'll tell you that now. So we can disregard it. Page 2 is very important. And it's almost all, well, I don't think almost always, it's always somewhere on the form going to state what is the date that you're completing this? What is the date this is current? Because circumstances change. It needs to be accurate as of the date that we say. So that's the first pitfall. Well, we've covered two pitfalls or common mistakes. Number one is client doesn't know that it's personal. Number two is they think that they should make stuff up. I clean that up for you. Make stuff up or record values of what they wish were the case versus what are. We're not going to do that. You and I are never, ever, ever going to put together financials that are not accurate. Now, can we improve them? Of course, but we are not going to put together financials that are inaccurate and submit them for funding. That's called bank fraud. You don't want that. I don't want that. Now, at the end of the day, if the client gives us bad information, we may not know that, but we're going to try to vet through to keep the client on between the rails. So with that being said, this is the personal financial statement. It'll ask a question about which business this is associated with. You might say, well, that seems inconsistent, right? If this is about a person, what does it matter? Or I have many different businesses. Well, fine, but we're working on a capital raise for a specific business, and so that is relevant. Now, if the business isn't formed yet or yet to be determined, that's okay. So let's scroll on down a bit. This is not an intuitive form, but you know what? You didn't develop it. I didn't develop it. The SBA developed it. So we're going to work with this form. Now, the truth is clients may or may not qualify for an SBA loan. We may not even be chasing down that rabbit hole, but this is the form we like to use. It's standardized. And so there are different PFSs. You might on occasion have a client say, hey, I already have a PFS I've already created. And we'd say, fine, if it's current, and let's call current within 30 days, submit it in. So it doesn't have to be this format, but this is the format that we share with clients. Let's talk about some of the highlights. And again, my job today is not to teach you step-by-step how to fill this out because we have a different training for that. That's not the best use of our time. If you don't know where that training is, email us, support@businessparalegalcorp.com, and we'll help you with that. All right, so cash on hand and in banks. Again, I almost feel like there's spelling error or capitalization errors. I don't know that H should be capitalized, but regardless, and again, Corey, I see your text there. Just email if any of you need individualized support on the PFS. Happy to help you. Just email us, support@businessparalegalcorp.com. We can make sure you have the form, make sure you know where the training is. But we have 311 of you on here, so I'm not able to adequately take notes of each of you as you ask for follow-up assistance. All right, so cash on hand. I was venting a little bit about, I'm not even sure H should be capitalized, but this is the SBA form, so it doesn't matter what you think, doesn't matter what I think. This is the standard form. So cash on hand and in banks, and so there's going to be some dollar amount that goes here. Sometimes we'll see someone put $0. Can you imagine someone that literally has $0? Now, there are some people less fortunate than you and I understand, but those probably are not CEOs of businesses. Those are probably not people that have signed up to raise at least $100,000. If they're completely insolvent, that's a concern. Now, if it is, right? And we'll deal with that. But in general, my point is sometimes you'll see people and what they do is they'll freaking go through here and they'll put 0 all the way down. Do you think that's accurate? Do you think for personal property, they don't even have a pair of underwear or a pair of shoes? Oh, no, I have clothes. Do you not have any electronics? Oh, yeah, I have electronics. Do you have any furniture? Yeah, I've got furniture. Well, those are all examples of personal property, right? How do you end up with $0? The best way to assess personal property is if you were to go get homeowners or renters insurance on your personal property in case of a fire, theft, natural disaster, what would it cost to replace all of your personal property? That's often 20, 30, 40, 50, $60,000, whatever. So if you see zero here, I would encourage you to get back with the client, share with them again the training of how to fill out the PFS, because they're not filling it out accurately. This client that I was battling with, and I hate to even say that, yesterday, had a number, and I'll approximate. He had about 600,000 listed here. Well, 600,000, sorry. 600,000 listed there, and no other assets. And I won't mention his name. I'll just call him Joe. His name's not Joe. Joe, how can that be? Joe, do you have a bank statement that shows that you have $600,000 in your bank account right now? Oh, yeah, I can get you that. You know, and you and I are already ready to call BS. It's like, there's just no way, because how do you have 600,000 cash, which some people have, not many, but some people have, but you literally have no other assets. So the goal is not to allow the client to create what they think is going to get them approved, but we need accurate information. Now, I do realize some people are old school and they might have money under the bank, under the mattress or in the coffee can or whatever, wherever they save money at home. So not everybody has all the money in banks. I understand, but there's some reasonableness standard, right? And then savings accounts, IRA. So again, my job is not to teach how to fill this out today. We have separate training. But the point I will make at this point is we'll put 2 star or 3 stars there. Well, let me put stars because it's got to be, we'll put a 1 here and a 1 here, because these are the 2 areas I'm talking about now. These 2 are a reflection of liquidity, right? So how much liquidity does the person have? I was working with JP this morning and one of his clients. One of his clients apparently had trouble with the PFS, reported that they had a whole lot of vehicles, but apparently it's not a whole lot of vehicles. It's a lot of real estate, but we'll get that flushed through. But the point regardless is client has over $500,000 of other assets, but has almost no liquidity. Well, that's a barrier as well, because what are we hoping to gain from this? We're trying to assess the client's net worth, and you'll see that that is a calculated number right over here. So we want to know what their net worth is. We like to see clients that have a net worth of $100,000 or more. 250,000 or more is best, but at least 100,000. You might say, oh gosh, Tom, this isn't going to work. Clients I work with don't have 100,000 net worth. Well, we can fix that legally and ethically. So once you and I finish working on their credibility, they'll have at least $100,000 of net worth if they follow our guidance. So we're looking to calculate net worth. So that's really the bottom line. And I realize how it's kind of hidden in here. And you can glance at this. You know, those of you that have gone to law school, you're looking for a simple inference of what's the bottom line of all of this. Well, the bottom line is net worth, but I realize it's kind of hidden in format. But secondly, then we're also looking at collateral. Do we have enough collateral to pledge for the loan? And then third, we're looking at liquidity, which is the point that I'm on now, which is assessed here. So if we find that someone has inadequate net worth, can we still help them? Absolutely. They're in the right place. If we have someone that has inadequate collateral, can we still help them? Absolutely. They're in the right place. If we have someone that has a lack of liquidity, can we help them? Absolutely. They're in the right place. So those are important points. Other pitfalls or maybe just more common mistakes. Let's take real estate here. Real estate as an asset, and I'll put a 2 just to represent what we're talking about here. Real estate as an asset is a current market value. And then we have to go over here for any mortgages owned on real estate. And there might not be any. Like the client I was working with JP this morning owns a number of real estate properties and there's no mortgages against them. But total market value of real estate is the asset. Total market value of automobiles is the asset. Total money owed on the real estate is the liability. total money owed on automobiles is the liability. So it's listed twice. So like I bought a Jeep, I'm looking at it now, a Jeep Grand Wagoneer, nice ride. So it new was 97,000. But is it worth 97,000? Oh, can't put that comma in. It doesn't like that, does it? Is it worth 97,000 now as it sits here in my garage? No, because it depreciates. What's it worth now? I don't know. I'm going to guess probably 85,000. So that would be what I would list. Oh, do I owe it free and clear? Oh, I wish, right? I've got a loan against it. And so I have to go over and then record what's owed against it. And I don't remember what's left. I think maybe 72,000 is owed against it. So this is the cumulative amount. And then it's asking for how much I'm making on monthly payments. And I think it's $1,659, if I recall correctly. So you can see, you can have the same item, whether it be real estate or automobiles, listed as an asset, current market value, not necessarily what you paid for it, what's owed against it, and then here's the payment. Well, what if you own multiple cars? Well, then you add up all of these, and you add up all of these, and you add up all of these, and you record the cumulative amount. Same with real estate. You might own one piece of property or multiple, but the total market value is here. Total debts owed on the real estate is here. So those are some common pitfalls that we see. Who has another common pitfall, and then I'll open it up for questions. Again, financial literacy is a big part of what you and I do. And unfortunately, there's a lot of people that don't know what cash surrender value is. You know, people will put in big ass numbers here, like 500,000. It's like, oh, Joe, making up a name, Joe, your life insurance has cash value of 500,000, or do you mean the death benefit in case you die? Almost always when it's a big number, it's a death benefit. Well, that's not an asset. That doesn't pay out until you die. That's not reflected here. Cash value is. So who has questions on the PFS? Now, as we go on down, there's the different sections. And so you'll see, for example, if we say that we have retirement income, what do we need to do? We need to describe it down in section 5. All right. So these are where the details are. But the cumulative amount, we're looking really ultimately for 3 things. What's the client's net worth? Do they look credible on paper? If not, we'll fix it. Do they have enough collateral for the loan? If not, we'll fix it. Do they have enough liquidity to look credible? Now, what JP asked this morning on his client that doesn't have enough liquidity is, well, what is enough liquidity? Well, there's no exact answer, but you can give it a reasonableness test, right? How much money do they have enough money on hand? Now, if they have a business and a balance sheet, then that almost overlays this, right? So now we have on one side, we have the PFS, and then we'd have, if you can imagine a rectangle over here, a balance sheet. And so the assets of the balance sheet can also contribute towards the liquidity of the applicant as well as collateral. All right, so who has questions on the PFS? Again, if you've not gone carefully through the training, but I will tell you, getting back to Corey's question, we have the Building Your Loan Package Adobe. It's a 2-page Adobe. The first page has instructions as far as the data set we need to collect for the loan package. The second page has the financial literacy curriculum, and it includes a link to this, to the PFS. It includes the instructions to this, to the PFS. So the short answer to Corey's question is, where do you get this? Go to the Building Your Loan Package Adobe. That is your 2-page resource that you should be sharing with your clients as they come aboard, frankly, once they pay the deposit. And it includes the link to the form and includes the link to the instructions. Okay, so let's go to Randy's question. So Randy's asking how to substantiate the net worth of a startup. Well, and your mistake is because of my mistake. So this is for the person right? Personal financial statement. The balance sheet is for the business. So this is not ever used for a business. This is used for a person. The balance sheet, which we're not looking at here, has the assets and liabilities of the business and the value. So Randy asked, her question really wasn't that, is how do you determine the value of a startup business? Well, the formula is assets minus liabilities equals value. So for the business, again, not on this form, but on the business balance sheet, you take assets minus liabilities, and that would tell you the result, what the company's worth. Just like here, how do we determine the net worth? Let's take you, Randy. What's your net worth? It's your cumulative assets, which are listed here, your cumulative liabilities, which are listed here. You subtract assets from liabilities and you get your net worth. That's the formula. Assets minus liabilities equals net worth. For businesses, assets minus liabilities equals the book value of the company. Now, sure, startups might not have much book value, but we're not worried about what the numbers show. We need to get accurate information. And then what you and I, Randy, do, and the rest of us, is we help strengthen the client's credibility on paper. So let's say that they don't have strength on their balance sheet. You and I fix it legally and ethically. Let's say that they don't have good net worth. They don't look credible. We fix it legally and ethically. So there's not a problem with fixing it, but if we don't have baseline information, what do? There's nothing we can do. We need baseline data, accurate baseline data. So I'm going to close on this, and then of course we'll get back together on Monday. If you're a white label partner, you're responsible for working with the client and getting the PFS. There's two schools of thought, and you can do whichever one you want. The first of which is to schedule a call or a Zoom with them and literally go through it line by line and help them fill it out in painstaking detail. So that's an option. That's not my preferred approach, but that's an option. I used to be a public school teacher, and my students didn't always love me, but my approach would be, here's the assignment, here's the instructions, do the best you can, turn it in, let me see that you've put effort into it, and then we'll improve or correct as needed. That's my approach. So I tell the client, here's the form, here are the instructions, try to do it, send in what you have, and then I'll help you improve. I think that demonstrates more value to the client, maybe converse to what you would think, because they realize now that they don't know how to fill it out and they need your help. But it's fine if you want to be a coddler and a handholder and help them on the first round. But I think it's perfectly fine to give them the instructions, give them the form, ask them to do their best, turn it in, let them know it's just going to be a rough draft. So those are the two different ways you can go about that. Once you get the PFS, get it into us, you and I need to review it very quickly, and let's start assessing where we're at with that client, because it's going to let us know if there's some work that needs to be done on their credibility. All right, well, we try to keep our training a little bit shorter on Fridays. I have a conference call. It starts at 8:30. Thanks, everyone. We'll see you back Monday morning. Hopefully this was helpful. Have a good weekend. Bye-bye.